Hello, I'm Jerry Romine and welcome back to my channel. Whatever you guys do, don't be an idiot and rush in and buy stocks blindly just because they're down. Sure, you might get lucky, but is it really worth the risk? I'm the first to admit that I'm still bullish on the stock market, and in large part that's because we have an election coming up and I expect the powers to be to pump a lot of money into the economy and artificially keep this stock market strong. But just because I'm bullish, it doesn't mean I'm going to rush in and buy every dip unless I have justification to do so. The truth is, I'm hoping to put $10,000 to $20,000 into the markets this week or next, but only if the conditions are right, and I'm hoping to make 50 to 100% of my money in a short time frame. And in today's video, I'm going over the stock setups and the confirmations that I look for before dropping my money into the market. Of course, I'm not a financial advisor, and this video is for entertainment purposes only, so grab a cup of coffee and join me, because this is not your normal stock channel. Let's go over the 4 steps of trade confirmation. Step number 1, we want to identify the trend. Step number 2, we want to identify support and resistance. Step number 3, we want to check the charts. And step number 4, we want to confirm indicator signals. And I'll be going through all of this in just a minute with Webull charts. And it's really important that we identify the trend. And the reason why is because this places the odds on our side. Always remember that the trend is your friend, and this is a really important one. You only trade over the trend line, and I'll show you what that means in just a second on the charts. And number 4, you want to pick your trend line. I personally like to use the 20 and the 50, although I sometimes use the 9 and the 20, but picking the trend line is an individual choice, and I do mine based on experience. When we're looking at moving averages, this is all part of technical analysis, so this is the moving average trend identification. The first reason I like it is because it's a simple strategy to use that everybody can understand. Number 2, the basic signal is whenever the short-term average crosses the longer-term average. For example, if you're using a 920, the signal would be whenever the simple moving average 9 crosses over the simple moving average 50. Common settings are the 920 and the 5200. Number 4, the longer the simple moving average, the fewer trade signals you're going to have. And 5, I often use a 920 and a 2050, and I'm going to show you how to set all of those up in just a second with Webull. And here's the key to my investing success. You want to invest in strong companies. Number 1, I like fundamentally strong companies. And a fundamentally strong company for me is one that has a PE ratio between 1 and 100. Then I'll be looking at it on the fundamentals. Now, I do like those PE ratios to be as low as possible, generally below 20, but I make exceptions depending on what the sector is. Number 2, I also like investing in growth companies. And a growth company would be one that has a PE ratio of over 100 for me, or if it is negative. Now, how you define a growth company is going to be up to you. I'm just sharing with you what I do and what works for me. Number 3, I use the beast mode to find companies with strong numbers. And again, I look at them in 2 different ways. Are they a fundamental company or a growth company? If they're a fundamental company, there are certain things that I'm looking for, like the net income, the levered free cash flow, and a bunch of other things. If they're a growth company, there's other things that I'm looking for that include the levered free cash flow, their revenue growth, and a couple of other things. And everything is in my beast mode spreadsheets. If you want to check those out, check out my Patreon page. And I'm a really big numbers guy. If you don't know the numbers, then I have to ask you 3 questions. Number 1, why are you investing? Number 2, if you lose money, who do you blame? And number 3, ask yourself this: how can I become a better investor? Now, there is more to stock market investing than just the numbers. Day traders, they make their living off of technical analysis, and I'm also a very big fan of technical analysis. In fact, I combine both fundamental analysis with technical analysis, but I think it's critical that we understand the numbers, and I really believe that my chance of success is greatly increased because I target companies that I believe in that have strong financial numbers, or if they're a growth company, that they have a really good reason to grow. I don't like shooting in the dark. Welcome to Webull Charts. If you'd like to get a copy of this, the link is in the description below, and I think the Webull Desktop 4.0 has some really nice features on it. Right now we're looking at NVIDIA. We have a 1-year chart, and one of the first things I like to do is put some moving averages on the chart. So all we have to do that is click on the moving average button, and boom, we've got them. This blue line is the 20-day simple moving average, the red is the 50, and this white line is the 200-day simple moving average. In terms of the 4 steps of a trade confirmation, the first thing we want to do is look at the trend, and right now we can see that the trend is up, although we do have an area of concern because we have several down days. Next, let's take a look at identifying support and resistance. So for support, we've got a little bit of support here that we just blew through. Our next level of support would be this point right here at around 430, and this was also a previous high on the stock, and then we have some congestion for a lower level support down here at around 395. For resistance, it would be this level right here at about 503 and also the previous high. What I've gone ahead and done is I've turned on just the 20-day simple moving average to illustrate a few points. When you're trading with moving averages, one of the things I like to do is I only want to trade when I'm above the moving average line that I'm using. For instance, if I'm using a 20-day simple moving average, I only want to initiate a long position when I am over that signal. So here we've got the 20-day moving average. We can see it's gone up, touched, up, touched, up, touched. A beautiful pattern. A couple times it's tested, but it went right back up and over. Now we've got our current market where it reached a high of 589.07. We have several down days, and now it is trading below that 20-day simple moving average. So for me, I would want to wait until it has closed above that 20-day simple moving average before I would take a position, because right now this trend is in jeopardy of being broken. Let's go ahead and look at a few more different stock symbols and indexes to get an idea of how this works. Right now we are looking at the IXIC, which is the NASDAQ. We can see the 20-day simple moving average has held up intact very well. The recent down days have dropped it below both the 20 and the 50. So for me, if I was looking to trade this index, I would want to see it above that 20-day simple moving average. Again, your choices could be different. Now let's take a look at the Apple stock. And for Apple, we can see they've also had a very nice run up. And I can see I also have a 9-day simple moving average on here. So let me turn that off real quick. All I do is come over here, turn off the 9, hit the done button, turn moving averages back on, and now we're right back to what we're used to. And we can see a nice run up. It dropped once, it continued, had a big earnings day report, went up, and now it's currently dropping. So for me, before I would want to buy Apple, I would wait until after this 20-day simple moving average. Now, if you wanted to, you could buy Apple right now, and in my opinion, you're just taking a higher risk. With that risk comes more potential gains. So if you're really bullish on it and you believe in that stock, by all means, go for it. Me personally, I want to wait because I want the safety of following this 20-day simple moving average. And if we look back a little further on the stock, we can see the same thing. The stock goes up, follows it, it's tested it once or twice, but the last time it really tested it, it went down for some time and then it had a recovery. I want to make sure that I don't get caught in the going down for some time, which is why I would play it safe and wait for it to come back over that 20-day simple moving average. Now we're looking at Tesla on the Webull stocks, and here we can see the 20-day simple moving average. Even though Tesla's a volatile stock, we can see that it moves away, it comes back, it tested below, went back up, and now we've had a couple of big drop days, dropped through that 20 all the way down to the 50-day simple moving average. Again, just like clockwork, I would be waiting for it to come over this 20-day SMA. And believe it or not, I'm still bullish on Tesla because I think when they have a battery day announcement, they're going to have really good news. It's a bit of a gamble, but I'm going for it. Let's look at these charts though a little bit deeper. Here we've got Tesla testing their 50-day simple moving average. When is the last time the Tesla price tested the 50-day simple moving average? Let's go back, go back, go back. At this time, it was coming through it from the bottom to the top, so that's a good sign. But the last time it went through it from the top to the bottom was way back in March, and then it proceeded to go down further before a recovery started. Just a little bit of a word of warning here. I'll play it safe, and I'm going to wait on this one. Now we're looking at Microsoft. Same pattern holds true. They've blown through that 50-day SMA, which is a red flag for me. And let's look at when the last time that Microsoft went through the 50-day SMA from the top to the bottom. We'd have to go all the way back here to March. Whenever the crash happened, they went through it, tested it one more time, and then they went back down all the way to their 52-week low. This is a bit of a concern and a red flag. Here we have them testing the 50-day SMA again, going through it. So for me, this is a good time to hold tight, wait, and see what happens, and hopefully they'll come back over that 20-day SMA. And the last stock we're looking at is CSIQ, which is Canadian Solar. This is a company that I like. We can see they've been a little bit up and down, but if we follow that 20-day SMA line, we can see they've had some recent nice gains, a really big run up. They've had a steep sell-off from their 52-week high, but look at this. They're still trading above that 20-day SMA. So if you're looking to get into this stock, it is still a good sign. They're already above that 20-day SMA. They've came down and they've touched it. If they continue to trade above that 20-day SMA, that could be a bullish sign for the stock, and hopefully that's exactly what's going to happen. I really hope that you guys enjoyed today's video, and always, if you don't mind smashing that thumbs up button, please do, because it helps the YouTube algorithm in a major way, which helps my video reach more people. Be sure to follow me on Instagram and check out my Patreon if you'd like to receive easy to understand fundamentals on stocks for just $20 per month. If you have any ideas for me, make sure you let me know in the comments down below, and if you haven't already received a free stock from Webull worth up to $1,600, use the link in the description. I really like their new desktop 4.0 trading platform, and it's definitely worth checking out. Sending love your way. Thanks so much for watching. stay profitable, and I'll see you on the next video.